The laptop?
The arrow, yeah.
Yeah. Okay, everybody. Let's start this week's seminar. Welcome to the CFAM UBS Data Science Analytics AI seminar. I'm very happy to have Yuyu Fan. Some of you may know her from your project. She's a principal data scientist at AllianceBernstein. So we have a project with AllianceBernstein that some of you are actively working on, and it's generally in the realm of using language models for stock selection. And Yuyu is going to present some of her latest work in this area. We've already had her as a speaker, and we're very happy to have her again as almost a regular. So she's a great speaker, and I think you'll really enjoy this talk. So a little round of applause for her. And yeah, thanks.
Thank you, Sasha, for the introduction. And it's great to be here again. Actually, I was here last week. So showing students about how we leverage NLP in the past few years and the evolutions of NLP and our evolutions of tools. So I'm happy to join this webinar to show you again on a specific project. So I purposely this project from last week's lecture, so at least some of you will learn some new things. So, but the framework will be pretty similar. And so feel free to ask any questions in the middle. So, you know, it's pretty straightforward content. Yeah, let me enlarge the screen first. Oh, okay, it doesn't work. Yeah, I cannot see. Oh, okay. Thank you. Yeah, so basically today I'll focus on is using NLPs, especially the Chinese language models, to select stocks on the China market. So, you know, talking about the China market in the past 2 years, or, you know, it's people feels it's just probably nothing there. But in the past 2 months, there's a big change, right? So there's a lot of fluctuations on the China market, and because of its relative inefficiency, that's why there could be a lot of potential opportunities. We can leverage quant strategies to find some influential like investment efficacy factors. And so it's like 2 or 3 years ago, we began to collaborate with a vendor who have a brand new data set. Wasn't used by any of those investors before. So it's basically called broker onsite research. It wasn't a new kind of event or thing, but the data collection kind of not that systematic in China market. So that's why like 3 years ago when we all got this data set, we decided to give it a try. It turns out it contains some of the useful information for investment, especially, you know, for stock selections on China A onshore. And at that time, I've already done a bunch of projects using NLP to do text analysis. And that's also the time kind of large language models have been developed across, you know, the global researchers on various kind of local languages. Nowadays, you know, with the release of large language model like ChatGPT or some of the open source Llama, we feel it's kind of working on multi-language isn't that challenging. But definitely go back to 3 years ago, it was a challenge because not only the model side wasn't that ready, but also for the researchers. Even you trust the model somewhat, but you still need to validate the results to have some intuitions behind the data to really understand what it's saying instead of just relying on the model. So fortunately, you know, I speak Chinese, so I understand Chinese. So naturally, I work on this project. So first, I want to introduce you some more information about the data. It's the data set called Broker Onsite Research Reports. So basically, the title of the data or the name of the data already indicate what type of data it is. So it's a broker onsite research. And it's a broker who initiated the research. So they send request to the components and told them, we would like to do on-site research. If the component accepted, they would go to the component and ask questions or physically check about their production lines. And then after that, the regulator required the component to disclose the information on public stock exchange. That's pretty interesting, right? Because it's a broker decided to do the research, and it was a company's responsibility to disclose them. So, and the disclosing form would be in a report. So they need to fill in the forms. In the form, there are specific requirements to disclose. Definitely who's a visitor and who's the receiver, the component side, right? And what type of things they discussed, what type of questions asked and answered. So then you from this you know that it's not all of the components will need to disclose such events, because brokers usually more interested in the popular components, right? For example, BYD, they received tons of broker on-site researches in the past few years. So on the China IA market, A-share market onshore, there's roughly around 4,000 stocks. So among those 4,000 stocks, usually on average in the past few years, there's around 1,200 got like a such broker on-site research. So based on some of the literature research on this type of data, there's definitely more research disclosed and research in China. There's very, very little I see from English publications, although it could be, and even English publications, it was more researched by researchers in China who published in English. So most of them see the broker on-site research would help investors to supervise components, so they would be more compliant to the regulations and rules. So here you see this is just an example of the report it has. And this basically, if you read, I think majority of you read Chinese, and you will see this is a form of it. And that's generally the content about what type of event or activity it is, and who are the attendees, what is the time, what is the location, and what is the specific name of the company side who attended in this meeting, and what is main content. So as I mentioned, relatively 1/3 of the components receive the broker on-site research. So the data was more complete since 2014. Before that, there's some kind of disclosures, but it's much more small numbers, which wouldn't be good use for research. So we started the research in 2014, and the research was done at the end of 2022. So we have a paper published in 2023. So you will see in this research, majority of the model we used are more like BERT-like models on the encoder-based model. If you are familiar with language model, transformer models, so then I want to give you more sense about the number of BRDs. So basically, it's roughly, if we think it is 1,000 components each year, although earlier years have less and later years have more, you see there's more components got this research, definitely for recent years. And there's also more number of BRDs disclosed. Not sure, because previously there was less research, or it was, during this period, especially COVID. I think there's a lot of virtual meetings done, and also the online system publications got more got more better than before. So the disclosure probably also becomes more, and maybe this is also a channel for companies to disclose information or talk about themselves when they have little, in-person meetings can be held. So this is the number of BRDs per component. As I mentioned before, some of the components will receive a lot of on-site researches, because they're kind of hot components. A lot of brokers are heard it for. On average, this is, I think, the median value. There's roughly around 5 BRD researches each component. But if you see these the distribution here, it will be very positively skewed because some of the small number of components receives large amount of researches. So this is, basically showing more side of the data. So the proportion of BRDs by months. And majority of the on-site research were conducted in May or November, possibly because of in February and October, that's a major holidays in China. So, and the typical length of BRD is around like 3 hours. But I think it's definitely like, also positively skewed because majority of the meetings I think would be roughly around like 1.5 hours. But because it is on-site research, so some of them can really go a little longer because of the in-person visit, especially for those manufacturing components. And this is the structure of the report. Basically, it has 3 parts, the general statements. It is either the opening or ending speech by CEO or the executives who are the receiver part of the component. And then there will be questions basically asked by the investors or the broker researchers. And then the last part will be definitely the responses by the CEO or other executives. So basically means when we generate some of the NLP signals, we can either do on each section, the statement, question, answer, or we can do it on the combined sections by speaker type or by section type, or we can put them on the entire transcripts. It turns out, because it is a report, it wasn't very lengthy as, some of the live transcripts, which will from, beginning to end. So the information has been probably selected or curated or framed by the component somewhat. So it turns out for majority of the signals we think that are promising or useful, the entire transcript will give better results than either the specific sections. Any questions on the data side before we move on? That's pretty straightforward, right? And simple. So now let's think about the NLP signals we could generate. And so as I mentioned, prior to the end of 2022, so large language models hasn't become popular. Although we tried some of the decoder models, such as the first or second version of GPT, and GPT-1, GPT-2, because it's purely open source at that time, and wasn't very impressive, the results. So we still rely on relatively traditional natural language processing methods. So there's those 3 categories of features we generated. So the first is about attribute. Attribute basically measures or indicate the amount of information from the BRDs, broker on-site research, and the number of participants, and some sort of approximate about the speed of the speech. Although this is definitely not an optimal approximation because this is a report, not the live transcription. If it is a live transcription, it will be a more valid feature. But we just want to understand, how much information is disclosed relatively to the length of the report. If the broker, stay there for around 3 hours, but there's only 100 words in the report, maybe it indicates something, right? So the company doesn't disclose the most important part, or it's too concise. Also, at the end, we didn't really find anything on it. So, but in the brainstorming stage, we use a data a mining approach, think about all possible things we could generate, and then just try it. So the second category is sentiment-based features. I think sentiment-based feature is kind of pretty standard category features. Usually we focus on because there's also a relatively easy feature to generate from text. There's already pretty mature approaches on either type of NLP approaches in order to measure this. So it could be, we basically put them into two categories, the context-driven and the dictionary-based approach. The dictionary-based approach is more traditional, NLP like approach, like bag of words. You have a dictionary of positive words and negative words, and then you get the next sentiment by subtracting the percentage of positive words from the percentage of negative words. So, but this is specific Chinese reports. So we need to find some dictionary that works well for Chinese documents. And the context-driven sentiment, I think nowadays we really understand it pretty well. So for the relatively early language models, although I think BERT was still popular like 2 or 3 years ago, but because of large language models, people already think BERT are kind of outdated. And what we use a bunch of BERT structure like models that's curated or pre-trained specifically on Chinese text. And some of them are financial specific. Basically means those are pre-trained on Chinese financial news, Chinese financial reports or filings. And some of them would be generic, trained on all type of Chinese documents, like like the Chinese version of Wikipedia, like Baidu. So they want to see whether the financial specific version will give better results. So definitely the changes of the sentiment is another factor we would check when we work on the portfolio construction part. The last category is an interesting category. I think it's pretty simple, but usually few people really pay attention to that. But it turns out on the Chinese document, complexity is a category that performs really well. So we use two ways to measure complexity. For English ones, English language, if you want to measure complexity or another term, readability, there is a specific metrics created by linguists to scale them. But in Chinese, it's pretty difficult. There's no established way to measure how difficult it is to understand a Chinese text. So we're basically using two simple approximates. The first one is average number of characters per sentence. Basically, it means if a sentence is very long, means this is a really complex sentence for you to understand. The second one is the proportion of adverbs and conjunctions. Means if the structure of the sentence is somewhat complex, if you use a lot of adverbs, and if you use conjunctions, but, and, however, otherwise, then it also means the structure of the sentence pretty complex. It will, need more kind of understandings in order to know what's really meaningful, what's the real meaning of a sentence. So this is the basic two features we use to measure complexity. That's the suite of alpha signals we constructed. So as you see, all those sort of NLP techniques doesn't really use large language models because of, I mentioned at that time, large language model hasn't been really popular or good performed. And later we actually tried using large language model, especially on the sentiment side, to small experiment to see whether it will do a much better job than BERT like structure models. It turns out the performance are relatively comparable, especially on generic sentiment analysis. If you want to do aspect-specific sentiment, it will be much more convenient using large language models, because for BERT, it will be pretty complex or even difficult to do it, because you need to really have very specific classification or fine-tuning examples. But for general large language models, it'll be easy. You can just directly use it in your prompt or the questions. Then it will be more aspect specific. So this is kind of some side information I want to share with you if you're curious why there's no GPT at all involved in this project. Any questions on this?
So do you find that there's a inflation of sentiment? In other words, everyone only talks positively about their company, or is this, do you find that these reports are critical and sometimes quite negative? Is there a bias towards the positive?
Thank you for your question. It's definitely a great question. So there are several points to answer this question. First is on the English transcripts, like the English earnings calls we studied, there's a clear inflation or upper trend on the executive speech part in the past, over the past 10 years. On the analyst question part, there's less trend of trending up on the sentiment. And so we wonder, it will happen the same to the Chinese reports, financial reports. It turns out the Chinese financial report on the company executive side generally have a much lower average or mean sentiment compared to the English ones. Maybe because culture difference, maybe because it is report. And for the English ones, we study the live transcripts. That's why, in reports, they probably use relatively flat tones. And on the analyst side, and then compare the question part and the speech part from executives, it's definitely executives still have higher sentiment than the questions. Questions, usually the sentiment is roughly around 0. But for the executives, it's usually, it ranges from -1 to 1 for the sentiment scores. It's usually around 0.12 or 0.15 for the executive part. But for the English ones, it's usually around 0.50 or 0.60. It's very positive. So now is some simple examples about the attribute, for this piece of text. This is like roughly 189 characters, and although it's only 3 sentences, so Chinese sentences can really become very complex. And the next one is about on the dictionary-based sentiment. For the dictionary-based sentiment, we actually use a dictionary created in academia by researchers in 2021. So it's pretty new, like a dictionary compared to the LM dictionary. There were a bunch of research to directly translate the LM dictionary, which are very popular to study English filings or reports. It's Lofram and McDonald, the 2 professors. So, but it turns out those dictionaries typically wouldn't have any usage on foreign languages if you directly translate them. So those dictionaries, so those 4 researchers, they directly do the research on Chinese documents based on the returns. So they curate those list of dictionaries, like positive words and negative words. And for those who you understand Chinese, you can also see the meaning of it also kind of corresponding to some positive or negative indications about the company's performance. Like this one, it means a steadily like a developer in a very health conditions. And like this one means the sales has been slide down. So, and then we use the Chinese BERT structure models. There's a bunch of models we use. So I actually put them into appendix because I don't think this is crucial for our discussion. But it's a bunch of Chinese specific models we tried. Some are developed by Chinese startups or tech companies, and some of the researchers in the US, like Google, they also have Chinese specific models. So if they go back to this comparison, basically I want to give you some intuitive sense about the difference between the context-driven sentiment and the dictionary sentiment-based sentiment. And it's clear, typically the context-aware sentiment will be capture the sentiment much better. So if we look at this sentence, this is the original Chinese sentence. This is the translation. We put it human translation because it's mainly translated by me, not the large language model. If I create the slides this week, I think I will definitely directly use GPT to do it. So this is basically a question from the broker researchers or the investors. They ask about how's the company's textile business. It doesn't have any clear tones, right? You just want to understand better on this specific part. And the context-aware sentiment gives a sentiment score closer to 0. It means it's pretty neutral. But if you see the dictionary-based sentiment, because development is a positive word in the dictionary, so it gives you pretty like a positive sentiment on this specific sentence. And if we see another example, and the third sentence, it asks about the company, how will you prepare for the strong seasonal fluctuations and fierce competition in e-commerce? Although it is a question, but we understand this indicate a pretty negative tone because ask about company how to deal with difficult situations when the competition is very fierce and the fluctuation is strong, right? So then the context of very sentiment, it gives pretty negative score, 0.90 almost. And the dictionary based just give you 0, neutral. That's because of, we see 2 positive words and we see 2 negative words and then they draw. So now you have neutral sentiment, which doesn't make sense, right? So then I want to give you one simple example about the complexity. So the intuition behind the complexity is, yeah.
So you do these things on one sentence at a time, but maybe this document has 1,000 sentences, 47 are net positive, 23 are net negative. How do you aggregate all these sentence level sentiments into an aggregate?
Yeah, sure. Yeah, that's a good question. So basically, it's just a different weighting mechanism. For example, I can get the sentiment for each sentence in this report. And then I can directly get the mean or some kind of scalings on those depending on the length of this document. And then get a sentiment score across all sentences to represent the sentiment of this report. And I can also directly measure how many, what is positive words, percentage of positive words or percentage of negative words on this document. And that's for the dictionary based. So basically, it is just how we treat the sentences level. If we just scaling them by the number of words in it, we will be directly as how we counted in the entire transcript or sorry, report. Yeah, does that make sense? And
for example, this tough question maybe has a great answer, and it's a positive answer, and the two.
Yeah, it could be draw.
Out.
Yeah. When we aggregate it on the report level, it could be just completely neutral because the executive solve this question or have a really nice answer as you mentioned. Yeah. And basically because it also have the probabilities. This is the net sentiment is calculated as a probability of being positive minus the probability of being negative. So there's different ways also on the context-aware sentiment level. We can either use a probability to get the mean net probabilities, and we can all just counting the sentences of being positive and sentences being negative. So this is kind of also different weighting mechanism. And we put a paper a pretty straightforward way. We just using the mean of the net sentiment for each approach. But in reality, we definitely find some scaling methods help to boost the performance, which we will keep to ourselves. Yeah. So yeah, and this is a complexity example. The intuition behind that is if a component performs really well, they don't need to use complex language to give you the message. They can directly see, our sales go up, what percentage, our revenue go up, what percentage. But if they have some difficulties, they need to think about how to convey this message to the public, to the investors. then that's where the language become more complex. They may see although, but, right? They may see, we are considering doing what, right? Then the sentence becomes longer and the structure becomes complex. So this basically two examples showing you is definitely cherry picking examples showing you, some of the components perform really well. They directly give you the year over year, like uh, percentage improvement. And also this is a low complexity example. The average number of characters per sentence is only 13. And we also measure some of the sub-sentence and also the number of complex and number of complex words out of the number of total words. The complex words at that time, they were created using species because you can do the post tagging, means you know what is the specific functionality of this word in this sentence. Then you just count the percentage of it. Similarly to this one, and becomes, definitely more complex. It has 58 characters per sentence, and each sub-sentence is even like twice more than this example. And definitely has more proportional complex words. So now let's see the signal performance. It's a really simple and easy like a backtesting strategy. So the backtesting window we set up is 2014 to 2022. And basically the universe we focus on is MSCI, China A onshore. And we are just doing a simple quintile portfolio, means based on the factors we have, we put them into 5 buckets. The first bucket contains the components with highest factor values. And the last bucket contains the components with the lowest factor values. And this is a monthly rebalance. We will use the data available by the end of each month and then rebalance the portfolio at the beginning of next month. And the look back window is just 1 year because some of the components, they can have really dated like results. For example, some of the components used to be a hard component and a lot of researchers like brokers went there for research. But in the past few months or even past 1 or 2 years, they don't have any data points. So for components that's really popular, there's different ways to weight the signals you have. Like in the past few weeks, they have a few, past a few months, they also have more. And then we usually use the latest available. And we also do some, exponential decay strategies to test about whether aggregate them will give strong factors. Here, basically, what we show is just a simple version, but just using the latest signals available on a day. Yeah, and then I want to show you the signal performance. This is complexity. So here what I show is only the long-short portfolio. So basically means Q1 minus Q5. But I'll also show you generally about how Q1 and Q5 themselves perform relatively to the benchmark. So you see the excess cumulative returns. For complexity first, which is a basic, really simple feature. We just measure the number of characters per sentence on average. And you'll see on Q1, if sorry, I need to re-clarify a little bit. So Q1 is always the components with the factors that we think that should be performed the best. Here it means Q1 will contain the factor values that's the lowest. Because for complexity scores, the lowest, the better. Means it has less complex language. And Q5 will be the highest. So that means they have more complex language in their reports. And you see here Q1 performs much better than Q5, especially after the year 2016. And this is a long-short portfolio. You see Q1 minus Q5. It brings an annualized return around 7% and an information ratio of 0.93, which is really good on China A onshore because on China market, it's difficult to get stable returns. And there are some fluctuations, especially at the beginning of the year, but it's generally pretty good. So this is a dictionary-based sentiment. Although the dictionary was released in the year 2021, but here you see it works somewhat in 2015 to 2016. But after that, it's pretty flat for a while. Although it goes a little up on 2020, and then it also stay flat. Although Q1, which has the highest sentiment, the components, and Q5, which has the lowest sentiment, somewhat distinguishable, the performance. And if we look at the long-short portfolio, Q1 minus Q5, we see majority of the returns or the efficacies, again, just between 2015 to 2016. And annualized return like 3%. And on the rest of the years, it doesn't really show anything interesting. So it means basically dictionary-based approach doesn't work for the China A onshore market. And the next one is on the context-aware sentiment. It's interesting. There's a lot of fluctuations in the early years, and then it's kind of flat. Then in 2019 and early 2020, it works really well on the long part, which has the highest sentiment. And since then, it also drops somewhat. And for the short part, the Q5, the components with the lowest sentiment from the early years before the mid 2020, it kind of continuously work, but later it also kind of flat or reverse the pattern. So if we look at the Q1 minus Q5, it definitely consistent with the results showing before 2020 because of the relatively good performance on the short part. So it works, but after that, it doesn't work. Yeah, why it doesn't work, I have no idea. I can guess it's like, COVID, they said probably after it becomes online research or the companies, a lot of companies began to disclose those reports online. There's some pattern shift about whether there's true information or not. So then we think about, for either of the signals, especially it works well on the complexity part. We also want to understand on the sentiment part whether it can, if we overlay it on the complexity, means the components who have really simple language to disclose their results, but also kind of have really high sentiment, whether it will boost the performance somewhat. So that's why we overlay the two factors and get the combined signals. So you see Q1 would be the components with the highest sentiment and the lowest complexity. And Q5 would be the components with the lowest sentiment but highest complexity. So it definitely, on the short part, we see some of the noisy part has been removed. It consistently decreased, although the magnitude are not that high. On the long part, it seems like some fluctuate, but it's a little better than before. So this is kind of the combined signals. And it definitely have a higher annualized return than before. And we see the signal kind of also worked a little longer than before. Instead of 2020, like now it's dragged to 2021. And the annualized wall also becomes a little higher. That's why the information remains pretty similar as before. Any questions?
Depending on the data sources, how they write down might be different. So this is like an analyst report. For example, audit report, they might be suspicious because of as a perspective auditor. For the news article, they might be different. So do you see the difference when you check the sentiment of the text data? Then can you see the difference between each data sources?
Yeah, I would say most of the data sources we use are pretty official data sources. For example, I studied earnings call transcripts. I also studied the Chinese version of earnings call transcripts because it's formally disclosed to the public. See, so they usually try to audit it and minimize potential errors, right? And for this one, BRD is company reports. So they usually reported I think it's per the regulation. It needs to be submitted within 9 days or 10 days after the research. So I think they are pretty careful about the language they use. And that's where I also generally see clear signals. And I also study news and social media data. It's really a lot of noise. Even if I use some of the high reputational data sources, like from those good publishers, it is still very noisy. So I think that's partially answered your question about different type of data, like yeah.
And I have a question online about the cost of shorting
Mm.
China A shares.
Mhm.
Is that a challenge or is that?
Yeah, for sure. Yeah, because not all stocks on China A is you can short it, and also there's special mechanisms to do it, and also the portfolios we maintain like at AB is usually long only, especially for emerging market. Yeah, the short cost is pretty high in China. There are some mechanisms, but it's not easy and also pretty expensive. Yeah.
And it seems like the short is the more like least volatile.
Right.
It works better, I guess.
Yeah. Yeah, interestingly, when I study the news, the noisy part of the data source, it's usually also the negative side. The short side works better than the positive side. Yeah.
Yeah, well, you kind of answered part of my question. I was wondering if you also analyze like government report, because Chinese government, they have a big influence on the equity market. So I was wondering if you have special weight on these reports.
What type of reports? Sorry.
Well, for example, recently he released some incentive or stimulation on the market.
Oh, okay. See, the government reports more on the macro side, right? Yeah. We don't have systematic way to capture those. If we have a systematic way, either from news or some official side releasings, it will be a little easier. At the moment, we're thinking about ways how we can capture those policies. Definitely in China is a big kind of factor in how the market reacts. Yeah.
I mean, since the report for different company were released at different time, how to dealing with the time difference when you try to rebalance the signal according to the signal?
Yeah, that's a good question. So as I mentioned, we're now using a very simple way to do it. We just set up a backtesting, look back window and a backtesting frequency, like each month's beginning, I rebalance, right? Then I would look at the latest signals available at each month's end. And the latest signals I have would need to happen in the past 1 year. So some of them could be pretty lagged, and some of them can carry it over for a few months when they have new values to replace in. And we also tried some of the exponential decay. Suppose, half-life, if they happen like half a year ago, then we would decrease the signal. If it is super positive, it probably just a medium positive. Yeah. But either way, it turns out the complexity generally works much better than sentiment. If you overlay them, there's some room to boost the performance, but also based on your risk tolerance.
About the complexity, are there some sectors that are inherently more complex than others? So
Yeah.
patterns like, I don't know, consumer products are less complex, financial companies are more complex, or?
Yeah, it's a good question. It could potentially in that way, and because some of the components like it may be easier for investors to understand, but other components may not. But I didn't specifically test this part. Yeah, I think when the investment teams they use these, they definitely consider about sector neutral. Yeah. Other questions? Yeah, Dahan.
I heard that the company's structural complexity matters to the company's returns, stock returns as well. So extension of the sector neutral, can we separate like a large cap and a small cap and a mid cap and then see the performance differences? And then to mitigate the effect rising from the capital structure differences, can we see that one?
Yeah, that's another interesting point because this is the traditional farmer French three-factor model, like like market cap is, yeah, and we didn't really do the further research on this, yeah, but that could be potentially like influential on this, yeah. And also for this factor, I guess in a few years there need to be some way to upgrade it, because if companies know if there's a way, it's just a simple way to capture it, right? They can easily manipulate their report, right? So instead of using one complex sentence, they can break it into different sentences, but still convey the same message. Yeah. So yeah, that's basically what I want to share. So I think it's definitely, for China A onshore, it's promising using the NLP techniques. And also there's a different type of metrics. And so that's why when we study text, especially with the emerging of large language models, there's various ways we can be creative to study the components to find investment efficacy. And this is some more introduction on our like research side, some of the publications we have. So basically we write for general purpose, means we want to share about how we leverage NLP or AI in finance. So like 2 years ago, we published a chapter for CFA Institute to share some of the high level like applications we have. And there's also like alpha generation specific ones we share in a also high level. This one is on the Chinese one I just shared, and we also have some on the English core transcripts. I think I presented this last year here. So, and we also do some of the technical research, meaning, on the, for example, this is one example on the large language model side. Although it's almost impossible for us to pre-train a large language model from the beginning, right, or from scratch. So, but there's definitely ways for us to tweak the language models in order to get better performance on the domain-specific tasks. And a typical two ways is you either use the few short learning, like you give examples in your prompt or in your messages to those models, or you do fine tuning, means you tweak some layers of the parameters of the language model with more examples. So this is a research on how many examples you should use and what type of what is a sufficient number of samples in each type of technique, and on different complexities of task, what you should choose. So basically, our focus in the current and future work will be optimize the use of AI. There's those traditional ways, more forecasting, more numerical focused, and there's also generative AI, which is flexible in content generation. And there's overlap of those two, like you can use the large language models to generate numerical values and then use it in forecasting model, right? And there's also research on time series large language models, means they want to directly leverage the transformer structure of the large language model to forecast directly on numerical values. So those are all interesting areas I want to share with you. So in case you are interested in NLP research and finance and in investment, like signal generation. Yeah, thank you.
I have a couple more questions from the chat, but if some of you have questions, we can pass the mic around so we can hear it well. So the first question is about transaction costs. Was that something you considered, or it's not? It's more of a proof of concept.
It's more like a POC. We didn't consider the transaction cost in the initial research, but the investment teams who use this signal definitely will consider that part. Yeah.
Makes sense. The other one is, have you tested these models specifically on stocks that are listed on multiple markets? For example, a firm that's listed in Shanghai, Hong Kong, or New York, other places than in China.
For this data set only covers China A onshore. So we only test those stocks in MSCI China A onshore. So but we do have competence, we have covered here, but also have ADRs listed in the New York Stock Exchange. So we would check, overlay those factors, but it's not disclosed here in this study.
So some of the stocks might
can
be,
be,
but
yeah.
not, you used a big universe of stocks.
Right. Yeah, and only a very small proportion of such stocks in China would have multiple disclosures.
And I think that's it. We have one more. Nope, that's it. Any questions locally from here? Okay, well, Yuyu, thanks again for coming.
Thank you.